Hello everybody, how's everyone doing? As for me, I'm doing pretty well. So far, the start of August has been less busy at work, which is always good. On top of that, the weather seemed to cool off a lot, like I can run in the afternoon without risking passing out from heat exhaustion. Bitcoin has made huge moves since our last video. I'm going to cover what these huge moves mean and where I think we go from here. After that, I'm going to do a little portfolio update so we all know where I stand. But before we do both of that, let's go over some current events that happened last week. Let's start with the good news. We saw Jack Dorsey buy Afterpay for $29 billion. Afterpay is an Australian fintech company. After this announcement, shares of Afterpay shot up by 19% in Australia. Jack Dorsey stated that Square and Afterpay have a shared purpose. Furthermore, Jack Dorsey is looking to integrate Afterpay into both its Square and Cash App ecosystem. The CFO of Square also chimed in saying that Square will be able to provide a more powerful e-commerce platform. More specifically, by integrating Afterpay into Square, it will generate higher average order volumes, which promotes lower wait times and makes the overall experience faster. So what does this have to do with Bitcoin? It looks like Jack Dorsey will allow people to buy Bitcoin from the Afterpay platform. This is always good as it furthers the adoption of Bitcoin. In some more important news, we saw a last-minute lobby push by the cryptocurrency industry to change the language in the bipartisan infrastructure bill. The changes made were designed to alleviate concerns of the cryptocurrency industry. Previously, the requirements were that most of the participants would be labeled as brokers and force them to turn over information to the IRS. This in return would allow the IRS to raise $28 billion over a decade. However, the lobby pushed lawmakers to clarify the definition of a broker rather than expand on it. The legislation also removed language that explicitly targeted any decentralized exchange or peer-to-peer marketplace. Instead, they added this more broad definition that defined brokers as anyone responsible for regularly providing any service effectuating transfer of digital assets on the behalf of another person. Lobbyists are also continuing to push senators for greater clarity as they are adamant that tough tax enforcement should not apply to miners, creators, or node operators. So far, they have assurances from top lawmakers such as Senator Rob Portman, but they want more assurance from the Treasury Department. However, it's not all good news. Last week, we had our normal dose of FUD. Elizabeth Warren went on CNBC and trashed Bitcoin. She said she's skeptical that Bitcoin will provide a reliable hedge against inflation over the long run. She provided two reasons for this. The first reason was that you can't assume that Bitcoin or any other cryptocurrency is somehow going to be divorced from what is happening elsewhere in the economy. She does have a point, as even I don't think cryptocurrencies are immune to the general economy. For instance, when the market tanked due to COVID, we saw Bitcoin do the same. Her second point is that she believes that the assumption that crypto coins are not going to have their own inflationary pressures is wrong. She stated that it does not necessarily have to have an increase of supply like what is happening to the dollar, but the volatility may play a role. To be honest, I can't make a good comment on this because I do not know about any other types of inflationary pressures other than directly increasing the supply of Bitcoin, which can happen because it's coded to only produce 21 million Bitcoins. Other than that, she wants tighter regulation on cryptocurrencies. She compared it to the FDA formation in the 20th century. She stated that she wants an organization to tell the public which cryptocurrencies are safe so it can be a more appealing asset. She also went on to state that when there are no regulations, the big guys are always in charge. She does not want to see people become victims of pump and dump schemes. Overall, this is nothing new because we already knew Elizabeth Warren was not a fan of crypto. We also saw the IMF warn countries against using Bitcoin as legal tender. This is not surprising because the IMF wants countries to continue to use national currency so they can control different countries with debt. They posted an article stating crypto assets as national currency ? A step too far. In it, they stated that as national currency, crypto assets, including Bitcoin, come with substantial risks to macro financial stability, financial integrity, consumer protection, and the environment. However, the article did acknowledge the underlying tech. For instance, they stated that real currency may not always be readily available nor easily transferable. Moreover, in some countries, laws forbid or restrict payments in other forms of money. They could tip the balance towards widespread use of crypto assets. However, most of the article was centered around trashing Bitcoin. The article stated that households and businesses will spend significant time and resources choosing which money to hold as opposed to engaging in productive activities, but government revenues would also be exposed to exchange rate risks. Furthermore, the country's monetary policy will lose bite. They then went on with the usual FUD saying that crypto is only used by terrorists and most countries don't have the necessary regulations in place to prevent any damage from happening. With that out of the way, let's look at some charts. Here we have the DXY. This is the last time I'm going to go cover this chart because we are back below this important trend line. We did break out of it a few weeks ago but failed to hold the line. Since we failed to hold the line, we crashed down. This is pretty bearish for the dollar and it does make sense as the US is printing historic amounts of cash. If the DXY does interact with this trend line again, I'll cover it, but for now I can just see DXY making lower lows or slowly consolidating downwards. Here we have Bitcoin. As you can see, we broke through this very steep green line that we have been following ever since we broke out of this purple wedge. This is not unexpected because usually after a Wyckoff's accumulation phase, we see some sort of retest of the upper ranges. Before this line got broken, we saw that price was testing the upper trend line. Currently, we're testing the lower one out of the two upper bands. If this holds, then it is extremely bullish for Bitcoin. However, once again, we have to be patient with Bitcoin. We have to see if price moves above this top line that is made from the two lower highs. Once this is broken, then Bitcoin can resume recovering the previous high and eventually make new highs. The final chart we're looking at is a chart that I never covered before. This chart is Ethereum over Bitcoin, which means it measures the dominance of Ethereum over Bitcoin. Anyways, something very interesting happened very recently. We see that we broke out of the upper trend line. This is pretty significant because it means that Ethereum is gaining dominance over Bitcoin, which means that Ethereum is rising while Bitcoin is consolidating or falling. It first broke out of the lower trend line that was connected by 3 lower highs, but right after that it broke out of the upper trend line that is connecting the 2 lower highs. However, the important thing is that we have to see if it closes above the trend line. If it does, this is pretty bullish for Ethereum. Now, let's end the video with a portfolio update. Here we have Bitcoin. As you can see, we were rejected by the $40,000 level and consolidating right underneath it. I am currently down 10% off this trade, which isn't so bad as last week it was close to 20%. This is my Litecoin position. As you can see, we're down 10% off this trade as well. Overall, I'm most disappointed in this position because Litecoin barely moved this week when compared to Bitcoin and Ethereum. Finally, we have our Ethereum position. I'm up over 300% on this trade again, and as shown in the last graph, Ethereum has been on a roll. With that, I'm going to end this video. If you like this video, press the like button. If you have any questions about this video, leave a comment below. If you want to watch more videos like this, press the subscribe button. This is Books of the Stock Market, and I'll see everyone next week. Thanks.